On today's show, disability insurance for key executive benefits. Part 3 of this week's series on Disability Insurance Awareness Month for 2014 with disability expert Tim Kukeza. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Insmart. Let's get down to business. Well, welcome to day 3, Tim.
Thank you, Steve.
Tim, you are all about DI. If you've missed any of our previous shows, Monday and Tuesday, I really exhort you to hop back out to our site, brokerage.com, and look at those shows and really get an idea of what we're doing, because really, I think it's a building block and it'll help your tutorials experience. I want to talk about today disability insurance for key benefits, and I'm thinking this is a huge issue. The older I became saying, man, I need to shift some of my thinking. I'm really wanting to protect my paycheck. When I'm in my 50s and I'm being headhunted or I'm being recruited by a headhunter, they go, Steve, what do you need? What do you want? I said, man, I want DI. Yeah. So if anything happens, I want to protect my paycheck. How big is this for an employer, a business owner, to protect his rainmaker? How big is this?
Yeah, I mean, there's a couple different things to look at there. One is if I'm that person that's being recruited, okay, then I want to make sure that if something does happen to me, that I get a paycheck. So, I mean, and that's across the board, no matter who you are, you want paycheck protection. But then the other aspect of that might be for the recruiting agency or for the employer, a key person policy on that individual. So if that person's my rainmaker in my organization and they're going to generate a lot of revenue for me, there's key person disability that you can have as an employer. I buy that on that key person. So if that person becomes disabled, the actual policy proceeds come back to me as the business, and I have the ability to do what I want with those proceeds.
So I heard you just say two things. The key exec wants his income,
yes,
but now the business owner also wants to be, really hit that ability to have that income come in to take care. He's going to have to go out and headhunt somebody.
Yeah.
He's going to have to find a replacement.
So again, if I'm the person being recruited, my paycheck is going to be critical to my daily living expenses, right? So I want to make sure that this person's providing me some sort of paycheck protection if I get sick or hurt.
I want to expand a little bit on the key person, because a lot of times we all think of the rainmaker, who's bringing in the revenue, our top salesperson. But remember, there's people that are running the show, the business operations, and that becomes another whole issue. You have an admin person that if that person, he or she went down, that would really hurt the organization. So I kind of want to expand our key benefits beyond just the rainmakers, but because there's some key players in operations and we should be covering them.
Yeah, not only operations, but also something like computer programming or people along those lines. So if you've got a person that's critical to the success of your business that isn't necessarily a revenue generator, but again, to the point where they are instrumental in making sure my business operates on a day-to-day basis. So if that person becomes disabled, even though they're not generating revenue, I can still get a key person policy so that if that person becomes disabled, the proceeds are coming to me as the business owner, let's say, and then I can use those proceeds to go out and hire a replacement, a temporary replacement, so that my business doesn't falter while that person's out on disability.
I've noticed online, as I was Googling the headhunter scene, getting ready for the show, I noticed that a lot of these people, as you get older, the people that are actually contracting with headhunters are on my age are actually putting that on the top of their list. I want to have disability benefits. And I want full benefits. That's really important to me now. It's not just getting a great salary. It's not just getting an underpinning bonus for production and performance. But now I want a protectionist issue. It used to be health insurance, and I think that's a granted.
Yeah.
But now we're talking about DI moving up the food chain. The older I get, and you're being headhunted. Listen, headhunters are going after seasoned veterans.
Yep.
They want people that can walk into an organization with no ramp-up time.
Right.
So they're now going back into the baby boomer market, and the baby boomer market is demanding. It's not just an option now. We're demanding. I want disability as a key benefit if I'm going to join your organization.
Yeah, and even if the employer has, let's say, a group LTD plan in place, there's probably for that person, because of their income, the opportunity to provide that supplemental DI policy on top of the group LTD. So as I am that key person being recruited by that employer, I want to make sure that, heaven forbid, if something does happen to me, that if I become disabled, that my paycheck is going to continue. The employer is not going to just continue to pay me, even though they came after me and wanted to recruit me for their organization. So that in that case, I want to make sure that they're providing me some disability protection for my paycheck.
When we come back from the break, we're going to continue this whole key person or key executive DI coverage, because I really want to drill down a little bit, especially the thing you just had, the supplemental market. That could be a huge market for you, especially because a lot of guys do have group. We'll be right back to talk about it right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. We're talking about key man or key executive coverage for DI. And we were talking just before the break. You said, well, you know, I noticed a lot of group, they'll have, and especially for execs, they might have a really group plan where I could be covered to maybe $120,000. But if I'm making $250,000 as a key exec, now I have a disparity. I'm not getting full coverage. Talk a little bit more about the supplemental market in that area.
Yeah, when you look at a group LTD program, you have to look at a couple different aspects. One is the percentage of replacement, typically a 60% replacement plan. The next thing is, what's the cap on the group LTD plan? Typically, the cap is $5,000. So that covers somebody that's a $100,000 income earner. But if you have somebody that's making over $100,000, they're going to be capped out at $5,000 of disability benefits. And then another thing to look at would be any sort of incentive compensation or commissions, because a typical group plan doesn't cover anything in regards to incentive comp or commissions.
But you just brought up something, Tim. I want to go down there. No, okay, so here's my comp.
Right.
Here's my base.
Yep.
Now you're saying, oh, but I have performances, and so at the end of my year, the DI company, or for the supplement, is actually incorporating not only my base compensation, but they're also taking care of what I actually made that year?
Well, yeah, I mean, when you look at that group plan, does that actually incorporate, or do you get consistent bonuses? Do you get incentive comp?
I would say no.
Okay, but in that situation, from a DI standpoint, if you have other income based upon the language of the group policy, maybe that policy doesn't protect any of that income. So if you've got a $100,000 base salary, that's covered under the $5,000 60% plan. But if over the last couple of years I've made $100,000 of incentive comp consistently, and my group plan doesn't cover that, my extra $100,000 is naked. I mean, there's no coverage at all for that extra $100,000. So I need to buy an individual plan on myself that can protect my extra $100,000 or my next $100,000 to the 60% replacement.
Okay, now when you keep saying 60%, does that mean, like, if I did a supplemental plan, I'm not deducting any of this, right? This is just a benefit that I'm paying for. The employer is not writing this out.
Well, and that's another aspect of the group LTD plan. So thank you for bringing that up, because on the group LTD plan, if the employer is paying for that, then that benefit is taxable to you come claim time. So even if you're under that cap on the group LTD plan, we see people on an everyday occurrence buy individual disability just to make up for the taxation of their group plan. Because if I'm going to go from making $100,000, and let's say my take-home pay is $70,000 as an example, so now if I become disabled, I'm going to get $5,000 times 12 months at $60,000. So there's already a reduction in my take-home pay, but I'm going to pay taxes on that $60,000 because my employer's providing that benefit to me. Now my take-home pay is what, 40-something? So all of a sudden now I'm used to living on 70, and now I'm living on 40-something. Right. So even in that situation, I'm buying an individual disability policy, forgetting about incentive comp or bonuses, just to protect the taxation of my group plan.
Well, I've never really thought about it as a supplement to my taxable event on my benefits.
Yeah.
So I could actually craft and design a combination plan with my group plan and an individual contract to cover, and is the disability carrier taking into account that I'm already getting this as a group in their calculation?
Yeah.
Okay.
When you look at that, they're going to make sure that they understand what your group plans are, if they're taxable or non-taxable, because there are some group plans out there that are voluntary plans. So in that situation, if it's a true group plan but it's voluntary, then my benefits are going to be non-taxable to me at claim time because I'm paying for them myself. But when we look at the actual illustrations and provide you the benefit amount, we're looking at, okay, is your group plan taxable or is it not? Where's the cap on your group plan? And then we're supplementing that with that individual disability policy.
Before we leave this segment, I want to ask you about when I'm sitting as an executive and I'm putting together my group plan, which you talked about, my supplemental individual, and now I'm an individual and my employer comes back to me and says, another perk, because I want to get into this tomorrow's show, any other perks that I want to put on that individual policy that's not going to be necessarily on my group? What do I want to add to that?
Well, I mean, one of the things that you might want to look at is something like putting a program that protects your retirement contributions. Because as we know, if you become disabled, you may not be able to, or you're probably not putting anything into your retirement because you're not getting a paycheck. So if you're funding a 401k, or if you're a business owner and you're doing something aside, now all of a sudden if you become disabled, how are you funding your retirement program? So there's options out there.
To me, this is a huge issue. We're going to get all over this tomorrow's show. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? Just hop out to our site, downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. We'll see you tomorrow.